Good morning, my dear students. Today, we have a very important topic that we are going to discuss. All right. And this is the recently held MPC Monetary Policy Committee meeting that had been held in the month of October only, yesterday only, right? So, today we will see each and in and out of MPC as well. All right. All about the MPC, we will try to understand and what were the important decisions that had been taken in this October, in this fourth meeting of MPC of this year. All right. So let's start the session. But before starting the session, I would like you to write in the comment section whenever you are watching this video. I want each and everyone to write in the comment section just for an awareness that what is the correct answer for these questions. Okay, these are some of the potential questions that may come in your upcoming RBI Grade B examination 2025. All right. So the first question, as you can see here, what is the revised GDP growth estimate for the financial year 25-26 as per the RBI latest projection? And this projection is actually decided in this MPC meeting of October only. So you need to answer me that what is the revised GDP growth projection for FY26. All right. So here are the options. The next question, as per the RBI latest projection, what is the revised inflation estimate for this financial year 25-26? All right. For this also, you need to answer that which option is correct. You need to mark on, right? And after this session, believe me, you can able to answer each and every questions. These 6 questions you can answer easily, right? So just stay tuned with me. Just be with me in the session. Next, from which date is the ECL, expected credit loss framework for provisionings with prudential flows proposed to be made applicable to scheduled commercial bank, excluding the small finance banks, payment banks, and regional rural banks, and all India financial banks. Okay, it will be applicable for scheduled commercial banks and all India financial institutions. All right, and these are the 3 banks that are excluded from the expected credit loss. So you need to answer me the expected date when it is going to be implemented, right? But today's session, we will, since expected credit loss has been discussed in the monetary policy meeting of October, so we will also try to understand the concept of ECL. We will try to understand the concept of ECL. All right. Next question: what are the RBI's recent proposal regarding the deposit insurance premium? Deposit insurance premium. This term is also being used in this MPC meet, right? So deposit insurance premium, we will also try to decode the importance of deposit insurance premium, how it is good for those banks which are performing very well. All right. So, and how to motivate those good banks. Okay. So here under the DIC GC framework, here you need to check on the options and mark the correct answer. Next, the 5th question. In a move to provide a greater credit access to investors, RBI has enhanced the limit on lending by banks against shares. RBI actually enhanced the limit for investors, right? So that investors can have the access of greater credit. As per the latest update, what is the revised up to which the banks can lend against the shares to the individual? You need to figure it out. Or earlier में क्या था, that also we will discuss. What was the earlier limit and what is the new limit that RBI has proposed for the investors to get the access of credit, right? And the last question of today's series, the 6th question: to improve the retail investors' participation in capital market, the participation of who? The small investors in capital market. RBI has revised the ceiling on lending by banks for the purpose of subscribing on IPOs. That these IPOs can be subscribed by the retail investors. For that, RBI actually revised the ceiling rate, the upper cap. Ceiling means the upper cap, right? Up to which the bank can lend to the retail investors. Okay, so you need to answer what is the new revised limit as per the IPO financing by banks. For IPO financing by banks. All right. So now it's time to discuss the key highlights, the major highlights that were discussed in the 4th meeting of RBI Monetary Policy Committee in this financial year, means financial year 26-27, 25-26. Okay, 25-26. or you can say FY26. So these are some key highlights. The first one, as we the first question also being framed from this statement as well only. RBI stated that for FY26, the current financial year, the FY26 GDP growth estimates have been revised higher to 6.8%. This you need to remember. GDP growth estimate revised from 6.5% to 6.8%. All right. Similarly, inflation estimate for FY26 has been lowered to 2.6%, and this projection is in the wake of the recent GST 2.0 reform, in which we have seen a major reform in various tax slabs. All right. Now, my dear students, I am giving you a task that you need to write the new tax slabs that has been announced in GST 2.0 in the comment section. The new tax slabs announced in GST 2.0 in the comment section. All right. Now, coming to the other highlights towards which the RBI governor had pointed out. RBI governor also unveiled the key measures to strengthen the resilience of Indian banking system, and for that, the first point, in order to maintain the resilience of Indian banking structure, financial institutions, the first announcement that he has proposed that about the ECL framework. We were talking about that only in this third question, expected credit loss framework. All right. See here the first question. ECL framework for provisionings with prudential force is proposed to be applicable to all the scheduled commercial banks. So ECL framework will be with provisioning. ठीक है? Provisionings भी होंगे उसमें. All right. For all the scheduled commercial banks and all India financial institutions. What are the exceptions? The exceptions are always important for any examination. The exceptions, the first one is a small finance bank, payment banks, and the reserve rural banks. For them, this ECL framework for provisionings with prudential force will not be applicable, and this will be effective from 1st of April 2027. The effective date will be 1st of April 2027. This is the answer of the third question. All right. So let's try to understand some more points regarding the ECL, because ECL word is being used in this MPC meet. So it becomes important for you to understand the concept behind the ECL, the expected credit loss, and you can expect a question in phase 2 as well from this concept only. All right. So let's try to look into it. ECL approach is a forward-looking method to estimate the losses from loans or investments that a bank is giving to the lender. All right. So bank is actually calculating the losses that loan or the investment that bank is making can bear. All right. Instead of waiting for a loan to turn into default, okay, after certain days, after 90 days, the loan turn into default. Instead of waiting that, bank now predict possible losses in advance, okay, and keep the money aside as provisioning, okay, as a buffer, like you can say, right? So accordingly, bank can calculate the risk, and it has divided it into 3 stages: stage 1 and stage 2 and stage 3. That also we will try to understand. Why did RBI introduce the ECL norms? Now, RBI has introduced these norms, okay, in order to calculate, so that banks can calculate the estimated risk, the losses in advance, and accordingly provide lend their customers, right? So why RBI introduced these ECL norms? To align with the Indian banking with the global best practices like IFSR 9, to ensure early identification of risky loans. Okay, we need to ensure the early identification of risky loans and better capital planning that banks or a financial institution need to do. All right. That's why this has been introduced, so that they can calculate the risk associated with the loans that they were lending. So how this works? How it works? How ECL works? The stages, different stages of ECL. We were talking about the 3 stages of ECL. On the basis of 3 stages, we are categorizing the criteria of loans. We are categorizing, okay, the loans, okay, that in which stage is actually lies. The stage 1 is the performing assets in which loan is healthy, means the borrower is actually paying the loan timely. Okay, suppose a person, I have given an example also, a person takes a home loan and he is repaying its EMI, monthly pay repayment, on time. These are categorized as performing assets, means these loans are healthy actually. Okay, next, underwatch. Underwatch, that it may turns into riskier loan. Okay, these are the credit risk has increased since the loans was given, but it has not defaulted yet. Yet it has not been defaulted, but bank is calculating that in a time it may get defaulted. It may come into the riskier category. That are underwatch loans. Okay, significant risk in credit risks. For example, that the same person who had taken the loan for home loans, okay, he had lost their job. He had lost his job, and now bank notices that irregular income. Although he is paying the EMIs, but not regularly. Okay, sometimes it got delayed. Okay, so at that very moment, bank actually calculate that no, that person has lost the job, so it may turns into riskier. It may be possible that this person who has taken the home loan, he may not be able to repay the loan amount as well as the principal amount associated with interest amount associated with that EMIs. All right. So for that loans to move to second stage, the bank keeps a bigger buffer for possible full-term losses. Bank here keep aside the provisioning that we are talking. Actually, bank keep a bigger buffer to for possible losses. The third one is defaulted loans, means loans actually got defaulted. The borrower misses to pay for 90 plus days. It becomes a NPA now, non-performing assets. All right. So bank will now attempt to recover the loss, and for this bank assume a measure. So provisioning is high here, means bank will keep a more money aside in as a buffer stock. Therefore, in such case, in stage 3, the provisioning or the buffer amount that bank used to keep aside, all right, in case of default is higher here. All right. Next, the key assets covered in this, the loans and advances given by the banks, irrevocable loan commitments, and the investment classified as HTM and AFS available for sale. So this is all about the ECL. This is all about the ECL, the three categories of ECL that we're talking about: stage 1, stage 2, and stage 3. The stage 3 is like defaulted category, high risk, and low risk category. All right. ठीक है, क्लियर है ECL का concept, expected credit loss का concept. All right. Coming to the next announcement. See here, in this meeting only, it has been proposed to revise the Basel III capital adequacy frameworks effective for commercial banks. Okay. And Basel III capital adequacy framework effective for commercial banks. Here also, these three banks are being excluded: the small finance bank, payment banks, and RRBs. And this Basel III capital adequacy framework will be effective from 1st of April 2027. Okay. This has also been proposed in this meeting. In order to strengthen, क्या purpose है? What is the purpose? In order to strengthen the capital adequacy for banks and financial institutions. Okay. So that in case of risk, they can manage their functioning. All right. Next, proposed regulatory restrictions on overlap in businesses undertaken by the bank and its group entities are being removed. Fourth point, introduces risk-based insurance premium. A risk-based insurance premium. This term also being coined in this MPC meet. Risk-based insurance premium model will help the bank that are more sound to save significantly on premium pay. Means banks which are performing good, okay, they can save more in case of premium paid. Right now, a flat premium of 12 paise is being paid for every 100 rupees. Okay, this is a flat premium. But in case of risk-based insurance premium, the banks which are performing very well and the banks which are performing Not good means weaker banks, they have to pay more premiums. Okay. Now, let's try to understand the risk-based insurance premium. Okay. At present, the banks are charged at a premium of 12 paise per 100 of accessible deposits, while the existing system is simple to understand and administer. ठीक है, तो ये है at present 12 paise of accessible deposits. So हम लोग समझते हैं the risk-based insurance premium with the current and the proposed, the current system we are talking about 12 paise on every 100. All banks pay the same insurance premium rate regardless of the how riskier or safer they are. Okay, so all banks pay the same premium, insurance premium rate of this 12 paise, whether the bank is performing very well, a strong bank, or whether it is a weak bank. Let's try to understand. Suppose a bank A, well capitalized, means a strong bank, having lower risk, and bank B with high NPS, weak bank, or poor governance, both has to pay 12 rupees per 10,000 of deposit to DICGC as a premium. Taki in case of bank run, they can pay up to rupees 5 lakhs to the depositors. All right. तो उसके लिए बैंक को एक प्रीमियम रखना पड़ता है, राइट? और एट as of now it is flat rate premium. तो क्या proposal रखा गया है? Proposal is that banks will pay based on their risk profile. Means banks who are performing very well, a stronger bank, who are well managed bank, safer bank, okay, they can pay a lower premium, but there should be a ceiling. Okay, means एक upper cap भी होगा, and riskier, poor managed banks, they have a higher, they need to pay a higher premium. Okay, तो वो चीज है that, और सीलिंग अमाउंट क्या होगा? मैक्सिमम लिमिट वही जो अभी का रेट है, फ्लैट रेट है 12 पैसे पर 100. दिस इज द मैक्सिमम लिमिट that a bank need to keep aside as a premium amount of deposits to DICGC. Okay, the objective to incentivize the strong risk management. Means ऐसा हो सकता है कि ये जो बैंक A है, बैंक A which is well capitalized, he can pay a premium of rupees of just 8 to 10 paise, and bank B who is not performing well, he has to pay premium of rupees 12 paise per 100 rupees. Okay, now it is clear with an example. ठीक है, तो basically the objective behind this to incentivize the stronger risk management, or to incentivize those banks which are performing very well. Okay, just to encourage those banks. Next, they have also talked to expand the scope of capital market lending by the banks that we have seen here, enhance the limit of lending by banks from 20 lakh per person. Remember this, I have in fact highlighted it, per person to 1 crore. Okay, next, for IPOs, in order to access the IPOs, the retail investors will be provided, the limit for retail investors will be extended from 10 lakh to 25 lakhs per person. Okay, so these are the another answer of another 2 questions that we have given here. You can find the solution as well. And the last one, that RBI has kept the repo rate unchanged to 5.5%, that RBI has announced in MPC meet of August, the 5.5%. Okay, sorry, June, it was there in the June. Okay, so 100 basis point we have seen, subsequently it has been reduced from Feb, April and June. And similarly, CRR, RBI has also revised, lowered the CRR rate. You need to comment in the comment section that what is the new CRR rate that RBI has proposed. RBI asked the banks to maintain. Okay, the CRR limit. Now, ये तो हम लोग समझ गए everything about the MPC meet of October 2025. Now let's try to understand कि MPC है क्या, मॉनेटरी पॉलिसी कमेटी जो है वो क्या था earlier, what was that, in place of MPC, what is the key function of MPC, what is the composition of MPC, everything we will try to understand in this one pager PDF only. All right. So, क्या भाई MPC actually it replaced the earlier arrangement of Technical Advisory Committee, TAC था पहले. It has been replaced by MPC in 2016 only. और इसमें क्या है, MPC का क्या रोल है? To control the central banks to regulate the magnitude such as interest rate, money supply, and basically MPC जो body था, ये it was formed in May 2016 in order to maintain the flexible inflation targeting framework, that is 4% plus minus 2%, means 2 to 6%. This is the flexible inflation targeting framework. And how MPC can do it? By revising the interest rate, or you can say repo rate. ठीक है, उसके द्वारा NPC actually inflation को maintain करता है, and it keep on check to maintain the inflation between this target, between the 2 to 6% of target. All right. So the primary objective of MPC is to maintain the price stability along with the objective of growth. ऐसा नहीं होना चाहिए that MPC we should always work for the price stability, neglecting the growth part. Okay. So ये RBI का actually this is the primary objective of RBI as well, to maintain the price stability along with keeping in mind the objective of growth of our country overall. Okay. So this is the role of RBI also. Next, MPC constituted by central bank under section, which section 45ZA. This is the section of RBI Act. You need to remember this section 45ZB, under which the MPC is being constituted. Okay, the function to fix the benchmark policy rate, or you can say repo rate, required to maintain the inflation within the specified target limit. Required to maintain the inflation into the target level of 2 to 6%, that is 4% plus minus 2%. All right. See here, composition of MPC, the 6-member committees. You must have been aware about that. RBI governor is the chairperson. Another member is RBI deputy governor in charge of monetary policy. And if RBI governor is not present in the MPC meet, then this deputy governor take the charge of chairperson. Okay. Then the third person, one official nominated by RBI board. These are the 3 persons from the RBIs, and another 3 members are the representative of Government of India. Okay. So these are the 6 members of MPC. The quorums for मतलब meeting होने के लिए, quorum is what? In order so that meeting would take place, at least 4 members are required. From these 6 members, at least 4 members should be there. After that, only MPC meeting will be held. This is called quorum. For a meeting shall be 4 members. Okay. Of which at least one of whom shall be the governor. ठीक है? Out of these 4 members, 3 members from here and 1 should be from the governor. और अगर ये नहीं होते हैं तो at least deputy governor should be there. He has the power of casting vote. Casting vote means if there is 6 members and 3 members, 3 for positive, 3 for negative, the casting vote जो है, in case of tie, RBI governor has the power to recast the second vote. Either he can vote for positive one or for the negative. All right. MPC is required to meet at least 4 times in a year. Very important. Sometimes they will say, because we usually know that this meeting actually takes bi-monthly. In every 2 months, this meeting has been. So we will calculate it that 6 times in a year. But no, this is maximum. But at least 4 times in a year, MPC need to be met. At least 4 times. Come say come 4 times. And this is the 4th meeting that we are seeing in the month of October. 4 times we meet kar sakte, 5 times we meet kar sakte, 6 times we meet kar sakte. All right. So that's all for today, my dear students. And obviously, these are the 2 programs for RBI Grade B on our platform. The first one is mentorship and test series program, in which we provide you the complete guidance from right from phase 1 till your interview. Okay. All the topics are being covered. Separately, separate quizzes are being given, test series are being provided, and obviously the mentoring support. And this is a new plan that Panchasutra program is specifically designed for phase 1 of RBI, and it is we are charging just 750. In this program is being divided into 5 major blocks: the block 1, block 2, block 3, block 4, and block 5. Block 1, in this financial related news we used to provide financial awareness in block 1. In block 2, we used to provide the various RBI important reports, the guidelines, the circular notifications published by RBI. In block 3, we used to provide the schemes that were there in the news, as well as the PIB compilation in block 3. The block 4, we used to provide miscellaneous GA, because last year only we have seen that 50% of the questions came from miscellaneous GA part, so it cannot be neglected in your GA portion. And another 50% you can link from finance, schemes, and the static portion of your syllabus. And obviously the block 4, we are giving you 5 high level practice test series, which you will find it at par with your main real examination. And the price of the course is 750. So that's all for today, my dear students. Bye bye, take care.